Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Excited to have a new guest to the program today. His name is Willem Middelkoop, Amsterdam-based and Swiss-born. Willem's the founder of the Commodity Discovery Fund, which started, I believe, in 2008. Willem's also a past market commentator on Dutch television and the author of 7 books, including The Tesla Resolution and The Big Reset, which came out in 2013, covering the global monetary system. Willem, thanks so much for spending the time to come on the program today.
Great to be here, finally.
Yeah, it took us a little while to organize it, and we finally made it happen. Willem, your fund is concentrated on discovery plays and development stories in the resource space, and we'll get into that a little bit later in the interview, but you've obviously got a very broad thesis on the broad market and a broad understanding of it. Back in 2007, you were telling me that you published a book just in the Netherlands that essentially would have been called When the Dollar Collapses. And you said that at some point in the next few years, there would have to be a credit collapse. And sure enough, Lehman Brothers happened just a few months later. And that brought you to an elevated spot in the Netherlands of a bit of celebrity status. You've now put a book out in 2013 called The Big Reset, and I was just looking on Amazon. It looks like it's quite widely read, and you've got quite a readership base, but you're talking about another collapse this time, and I want to start there to understand what you see happening on a macro scale coming ahead.
Well, I think most of your listeners, they are aware of the Bretton Woods conference in 1944, the end of the Second World War, where the dollar became the anchor for world's monetary system. And I think we're in the last stage of the current world monetary system. And if we look at the actions coming from China, Russia, these countries are accumulating huge amounts of physical gold. My book has been translated into Chinese, so I traveled quite a bit to China, spoke with scholars over there, and then you learn that countries like China and Russia are really preparing for the next phase in the international financial system. And I think the dollar could decline in value, but gold could see quite a bit of revaluation in the next phase.
Willem, in 2007, gold performed its duty in providing liquidity for investors in a time of total illiquidity. But gold stocks and gold, despite bouncing back faster than the broad market, did not act in a negatively correlated way to that crash. And fast forward to today, totally different scenario where we've got gold stocks at a low compared to the broad market. When this next crash comes, do you anticipate having a similar reaction to 2007 or something much different?
Yeah, I think we could say that the precious metals markets are not free markets. So there's quite a bit of manipulation going on, I think, through the paper gold system, through the futures market. And I think for us as investors in the gold space, it's quite unfortunate that both China and the US like the current situation with relative low gold prices, because the US needs a low gold price to support the current dollar system. And the Chinese, because they're accumulating gold, they prefer to have low gold prices because then they can buy more. But I think both know that the current situation could be compared to the 1960s. In the 1960s, we had a London gold pool. It was a club of central bankers, Western central bankers, trying to keep the dollar low at $35 per ounce. And this collapsed in the late 60s. And I think we're almost at the same position in which, countries like the US, they try to keep the dollar as low as possible, near $1,000. But soon we'll reach a point that the market forces will become too strong. and the gold price will be revalued. And this revaluation of gold price could occur because of market forces, but it could also be a planned action by central bankers, a G20 action, in which gold is revalued during a weekend. And this will really help the balance sheets of the US and Europe and even China and even Russia. So I think we have exciting times ahead. And the big question is how gold equities will perform in the next few years. But I think it's a very good idea to have part of your net assets in gold equities, because they tend to outperform gold, especially during these kind of revaluations. We've seen this in the 1930s, when we also had a revaluation of gold during a monetary reset, which was part of the New Deal by President Roosevelt. And we've seen this in the 1970s as well, after the closing of the gold window in 1971.
Willem, I know you've run some correlations to back in the 70s to see what could happen in the event of either some type of a government reset or just a revaluation in gold. Do you have any ideas as to the dollar price of gold and where that should be headed?
Well, if the revaluation of gold really takes off, I think you will see a very quick move north of $2,000, and I expect a similar. We could expect something similar like in the 1970s. If you look at the graph, the graph of the gold price, you see that between 1971 and 1975, the gold price jumped by a factor 4, and then we had a mid-cycle correction in 1975, and then we had the blow-off in the gold price between 1976 and 1980. And I think if you compare the gold price since 2000, we've seen a similar kind of move between 2000 and 2011. Gold rose sharply. Then we had a mid-cycle correction between 2011 and 2016. And now gold is on the verge of breaking this downtrend. We could expect a quite sharp move towards $5,000.
Now, you mentioned previously in the interview that gold stocks provide a leveraged play to the upward moves in gold. Obviously, that's where you're focusing a lot of your capital and the capital of your fund. In looking at the gold space, you've got the producers at the top and then development stage projects, and then obviously at the bottom there's the explorers. Where are you looking and why on getting the most leverage?
Well, as you might know, because you're also a student of resource stocks, there are two parts of the mining cycle which are more interesting for investors. And the first part is when a discovery is being made by a relative small exploration company. We try to play the sharp appreciation of the market cap by junior company working on the discovery, where companies tend to move from 30 million market cap towards 300 million. But there's another part of the mining cycle which is quite interesting, and that's when a development stage company is about to start production, and then we tend to see a re-rating as well when the production really starts to bring in cash flow.
Absolutely, and in terms of how your fund deploys capital, how and kind of comparing that to a traditional portfolio that anybody would have. How much diversity do you look for across the space? How many different companies do you like to allocate to? It's obviously a very risky business.
Yeah, that's why you really have to spread your risk. And on average, we have some 100 positions in our fund. Half of them are what we call toes in the water. You just want to have a small position in a company to see how the exploration program works out. I think we have around 40 or 50 companies in which we have some serious money. One of our positions could be 10% of our fund. Currently, we have quite big positions in companies like SolGold, working on a huge copper discovery in Ecuador, but also on the Pilbara, the gold-bearing conglomerates play, Novo and Artemis. I think this discovery is not well understood. So, but you have to spread your risk, otherwise you can get killed because of one company going wrong.
Absolutely. Obviously, the kind of coveted thing as a resource speculator is to invest in a company that ultimately gets taken out by a bigger company. I know that you focus on that a lot, and you've had quite a bit of success in picking those companies.
Yeah, if you look at our track records in the last 9 years, we had 45 takeovers. The full list is on our website. And so on average, we have 6-7 takeouts every year. So once you understand how these mechanisms work, it is not that hard to predict which companies will be taken over within the next 3 to 5 years. So we really focus on world-class discoveries. It's very unfortunate that they get scarcer and scarcer. It's very difficult to find a good silver discovery these days. So we like certain metals more than other metals. We expect shortages to occur within the next decade in silver, platinum, palladium, zinc. The zinc situation is interesting. Cobalt, we have position in cobalt, of course. I think lithium is a little overhyped. There's enough lithium around, but especially after 2020, you'll see very positive supply and demand situations in most of the metals, and even uranium and diamonds look very healthy after 2020.
Well, you've hit on a lot of key commodities that we speak about here at Palisade Radio, and excuse me, I'll have to get you back on the program at some point to dive into the details of each of those. I don't know what regulations you have, Willem, on and what you're able to say, but are there any companies in particular that you're able to talk about that are held in your portfolio?
Oh yeah, we can discuss certain positions. We have a big position in NextGen Energy. We've been investing in NextGen Energy. They're responsible for the largest uranium discovery in the North Americas in the last decade for sure. We've been investing in them since 2014, when they were trading at 30 cents. We think NextGen is very undervalued at this point. Li Ka-shing, the Asian investor, the Hong Kong investor, has a large position in NextGen. He bought in around $3 per share, and I know his target is at least $10. So NextGen is a very healthy play for us, besides SolGold and some of the Australian plays.
In terms of companies in the gold space that you kind of see as maybe an imminent takeout target, are there any that pop up that are held in the fund?
Yeah, I think we have some situations like Arizona Mining is an interesting play. Their zinc discovery will be taken out at some point. Tinka Resources, another zinc discovery, I think is interesting one to follow. I think SolGold will see a very interesting situation around SolGold because we know Newcrest and BHP are both interested in at least in their land package, and the fact that BHP opened an office in Ecuador last year is telling. So I wouldn't be surprised to see a bidding war starting around SolGold around the middle of this year, because they're very undervalued at this point, I think. So we have some exciting times ahead of us, and if you're an investor in Novo Resources like we are, and Novo Resources taking the lead in the Pilbara gold rush, I think we'll have a very exciting summer and Q3 and Q4 on that situation.
Excellent. Well, Willem, thank you so much for coming on the program. For listeners, I know they can go to Amazon if they want to buy your book, The Big Reset, and I'm sure a lot of the themes you talk about from 2013 are still very much so prevalent today as we wait for this next crash to take place. Is there anywhere else that people can go to get information or get in contact with you to get involved in your fund?
Yeah, I'm quite active on Twitter. So if you do a little search on my name on Twitter, you'll find my account and you can follow me. And I cover quite a broad area of topics on Twitter. And of course, if you Google Commodity Discovery Fund, you'll find our website, which has quite some interesting information. We also publish some videos and research. So that's the best way to play this.
Excellent, Willem. Thanks so much for coming on.
Okay, thanks for having me.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?